some major developments, from crypto caution in the UK to China's latest tech clampdown, and a major real estate boom right here in the UAE. And later, we'll break down a $6.5 billion AI gamble by India's biggest IT giant, TCS, and what it means for the global AI race. Welcome to Finance Pulse, and here are the top headlines of the day. Our first story, a sharp warning for crypto enthusiasts. The UK's biggest investment platform, Hargreaves Lansdown, has urged investors to think twice before diving into digital assets. This comes right after Britain lifted a 3-year ban on retail investors accessing crypto exchange-traded notes, or ETNs, products that allow traders to get exposure to cryptocurrencies through regulated exchanges. While the move was seen as a step toward mainstream adoption, Hargreaves Lansdown says the hype doesn't change the fundamentals, calling crypto not an asset class and warning that volatility and lack of intrinsic value make it unsuitable for most portfolios. Meanwhile, in Asia, China has blacklisted the Canadian semiconductor research firm Tech Insights after it published reports analyzing Huawei's advanced chip technology. Beijing's Commerce Ministry announced that the company has been designated an unreliable entity, which means Chinese firms and individuals are now barred from working with it or sharing any data. The official reason? National security. The decision is seen as another sign of China tightening its control over the flow of information in its chip sector, and it could make it even harder for the outside world to assess just how far Chinese semiconductor capabilities have advanced. Back in the UAE, Ajman's property market is showing impressive momentum. According to the Department of Land and Real Estate Regulation, the Emirate logged more than 5,000 real estate transactions in the third quarter of 2025, worth over 8.12 billion dirhams or about $2.21 billion. That's a 47% jump compared to last year. Officials say the rise reflects investor confidence, strong infrastructure growth, and sustained demand across residential and commercial property. Now, for our Finance Pulse deep dive, a story that could reshape India's position in the global tech race. Tata Consultancy Services, one of India's largest IT firms, is investing a massive $6.5 billion to build world-class AI data centers, starting with a facility capable of generating 1 gigawatt of computing power. To put that in perspective, that's nearly equal to India's entire data center capacity today. The project will be rolled out in phases over the next 5 to 7 years. TCS says each 150 megawatts of AI compute power will require about $1 billion in investment, funded through a mix of equity and debt, with support from financial partners. The centers will serve a mix of AI startups, hyperscalers, deep tech firms, and even government entities, offering what TCS calls passive data centers that act as backup infrastructure for critical AI workloads. CEO Kriti Vasan says the company is aligning itself with clients' growing demand for artificial intelligence, and that this transformation could make TCS the largest AI-led technology services firm in the world. This announcement also comes as several US AI giants, from OpenAI to Anthropic, expand their presence in India. TCS's move positions it not just as a service provider, but as a key player in the global AI ecosystem. Still, it's an ambitious bet. Building and maintaining such massive infrastructure requires enormous energy resources and long-term investment. The big question now, will this bold pivot give TCS an edge in the AI boom or become a costly debtor if the market slows? Either way, it signals one thing: India's tech future is being built on AI, and TCS wants to lead that revolution. That's all in Finance Pulse for today. Follow the Finance 360 for more updates.